Picking stocks can feel like navigating a dark forest without a map. One wrong turn and you could be lost. The stock market, with its ups and downs, is a mystery for many. Even seasoned investors with years of experience can stumble. Company once considered giants crumble overnight. Stock prices plummet. Investors are left bewildered, their portfolios in shambles. The dream of finding that one company, the next Apple or Amazon, keeps many up at night. But the reality is far less glamorous. And that's where ETFs come in. ETFs, or exchange traded funds, are a breath of fresh air in the often stifling world of investing. Think of them as a basket of stocks. They allow you to invest in a variety of companies with just one purchase. Imagine owning a small piece of dozens, even hundreds of companies. This diversified approach is like having a safety net for your investments. ETFs trade on stock exchanges just like individual stocks. This means you can buy and sell them easily throughout the trading day. In the next section, we'll dive deeper into why this diversification is so crucial for your financial well-being. Imagine this. You put all your savings into one company, you believe in it, but then the unexpected happens. Suddenly, your investment plummets. Your hard-earned money vanishes. This is the danger of putting all your eggs in one basket. ETFs, on the other hand, offer a safety net. When you invest in an ETF, you are spreading your risk across multiple companies, industries, and even countries. In the next section, we'll explore the power of diversification in greater detail and why it's the cornerstone of a sound investment strategy. Diversification is not just a fancy word thrown around by financial experts. It's a fundamental principle of smart investing. When you diversify your portfolio, you are essentially creating a safety net for your investments. Just like a farmer plants different crops to protect against the risk of a single crop failure, you are protecting your portfolio from the volatility of individual stocks. Let's say you invest in an ETF that tracks the S&P 500. This means you own a small piece of 500 different companies. Diversification is not just about the number of stocks you own. It's also about investing across different sectors and industries. Remember the 2008 financial crisis? It was a turbulent time for investors. The stock market plummeted, and many people saw their life savings disappear overnight. However, those who had diversified their portfolio with ETFs were better positioned to weather the storm. While some sectors, like financials, were hit hard, others, like consumer staples, remained relatively stable. ETFs, with their built-in diversification, offer a level of protection against market volatility that individual stocks simply cannot match. In the next section, we'll explore another key advantage of ETFs, their cost effectiveness. Investing isn't free. Fees can eat into your returns over time. Trading commissions add up, especially with frequent trades. ETFs usually have lower expense ratios than mutual funds. They track an index and don't need a team of analysts. Every dollar saved on fees can grow over time. Let's look at a real life example to illustrate the cost difference between investing in ETFs and individual stock. Say you have $10,000 to invest. You could buy shares of 10 different companies, paying trading commissions for each purchase. Or you could invest in an ETF that tracks the S&P 500, paying a single low expense ratio. Over time, the cost savings of investing in the ETF can really add up. But it's not just about the upfront costs, it's also about the hidden costs of managing a portfolio of individual stocks. ETFs offer a simple, low-cost way to invest in the market without the hassle of managing individual stocks. Let's face it, life is busy. Who has the time to spend hours researching companies, analyzing financial statements, and monitoring stock prices? ETFs take the guesswork out of investing. They provide a simple, convenient way to gain exposure to a diversified portfolio of stocks without the need for extensive research or active management. With ETFs, you can set it and forget it. This ease of management makes ETFs an ideal investment choice for busy individuals who want to grow their wealth without the stress and complexity of stock picking. Imagine this, you're setting sail on a cruise. Do you want to be the captain, navigating treacherous waters, or relax on deck, enjoying the journey? ETFs are like having a skilled crew steer your investment. They offer automation and efficiency. Focus on life, knowing your investments work for you. You're still in control, choosing ETFs that fit your goals. The stock market, much like the open sea, can be unpredictable. One moment it's smooth sailing, and the next you're caught in a storm of volatility. Individual stocks, especially those of smaller companies, can be particularly vulnerable to these sudden shifts in market sentiment. ETFs, with their diversified holdings, act as a buffer against these market storms. When one sector or company falters, the impact on your overall portfolio is minimized by the performance of the other holdings. This inherent stability makes ETFs a particularly attractive option for long-term investors. They provide a smoother ride through the inevitable market ups and downs, helping you stay focused on your long-term financial goals. Think of ETFs as the financial equivalent of a well-balanced meal. Just as a nutritious diet includes a variety of foods, a well-rounded portfolio should mix asset classes. ETFs make diversification easy, providing a financial safety net. Investing in an ETF tracking a broad index like the S&P 500 buys a piece of the U.S. economy. This diversified exposure cushions your portfolio, providing a smoother investment experience. Let's talk numbers. Anyone can make claims, but real proof lies in the performance, and ETFs have a history of delivering. They have consistently outperformed many actively managed funds, especially over long periods. Take a look at the SPDR S&P 500 ETF, SPY for example. It's one of the oldest and largest ETFs tracking the S&P 500 index. Over the past 10 years, SPY has delivered an average annual return of around 10%. Studies have shown that only a small percentage of active managers consistently beat the market over the long term. ETFs, with their low costs, and passive investment strategy provide a more reliable path to long-term growth. Look at the historical data. ETFs often outperform mutual funds over long periods, especially broad market ETFs like the S&P 500. Lower costs and diversification drive ETF performance. ETFs have lower expense ratios. Diversification is crucial. ETFs offer growth potential and risk management. Meet Sarah, a young professional who started investing in ETFs 5 years ago. She didn't have a lot of money to start, but she was determined to grow her wealth and secure her financial future. Sarah chose a simple, low-cost ETF that tracked the S&P 500 and consistently invested a portion of her paycheck each month. Fast forward 5 years, and Sarah is thrilled with the results. Her ETF investments have grown significantly, outpacing inflation and providing her with a sense of financial security. Sarah's story is not unique. Millions of people around the world have discovered the benefits of ETF investing. Section 1. The ETF embrace a safer path to financial security. ETFs offer stability and simplicity in the turbulent sea of investing. Think of ETFs as a compass guiding you towards financial peace of mind. Sarah's story highlights the power of ETFs. With ETFs, you're part of a broader strategy for financial wellness. Diversification is key, spreading your risk. ETFs offer a piece of hundreds of companies in one investment. It's like having a safety net woven from numerous businesses. And let's not forget the cost effectiveness. Lower fees mean keeping more of your hard-earned money. It's about working smarter, not harder. Make your money work for you. Ready to take control of your financial future? The beauty of ETFs lie in their accessibility. Whether you're a seasoned investor or just starting, there's an ETF for you. It's like choosing a book from a vast library. But remember, knowledge is power. Don't just dive in blindly. Take the time to educate yourself. Understand the different types of ETFs and their risks. A little research goes a long way. And that's where I come in. My mission is to empower you to take charge of your finances. ETFs are a powerful tool. Explore them and see if they align with your goals. Sharing is caring. Spread the knowledge. Share this article with friends and family. Let's build a community of empowered investors. And don't forget to subscribe to my channel and give this video a big thumbs up. It helps others find this valuable information and supports my mission to bring financial literacy to the world. Here's to a brighter, more secure financial future for all of us.